Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. And so, this is the highly regarded options theses week 13. And this is actually going to be an abbreviated one because I'm going to a wedding this weekend. I forgot to share that with you guys. And so not only is this going to be abbreviated, but I'm also going to be missing ticker request live on Sunday, and I will be missing pre-market prep on Monday. So hopefully I do remember to put out a little announcement on the channel about that, but if not, this is that. And because this is going to be an abbreviated options theses that's highly regarded, I am going to be skipping the timestamps for this, really just because it's probably going to be a little disorganized, and I'm really just going to glance over things. But the big reason why I wanted to put this video out is so I do have the link in the description to the spreadsheet. If you guys do find that helpful, let me know in the comments. Otherwise, I may stop doing it. But I do feel like it's kind of a nice resource to be looking at the options data, as well as maybe, seeing the kind of stuff that I've got going on here. And so I'm just going to go over a few things in the list real quick, and then just go over the usual spiel here, and then dive into a few that stand out. And so I didn't add any new tickers to the list. I'm actually going to be removing the VIX because I have been covering the VIX as well as the UVIX during pre-market preps, which I'm going to be trying to do every single morning the markets open, before the markets open, which will be live streams when I'm not at work, and will be pre-recorded that morning before I get to work. So yeah, that should be a nice resource. And I think, with my following up on the UVIX and the VIX every day, this going over the options data here will not be as necessary. And then a couple other ones that really, just kind of stood out to me. I do have some down here that I have buy orders on, so I wanted to go over those. I did add notably to my ChargePoint call because I just want to get out of it. And, the chart that I went over during Friday morning's pre-market prep did highlight that a bottom could be in. So I really just kind of wanted to, go a little bit heavier with ChargePoint, get the average down and get out. So I'll go over that. And also plug was looking pretty good, but I didn't really go too aggressive with that. And, I am going to just try to be a little bit less aggressive with some of these because every week I always want to be adding more to my portfolio, to my positions. But really, I just need to be taking profits and cycling out. So I'll go over that with kind of a revised note on this guide in just a second. But first, I do need to go over that this is just a trading journal for myself personally. This is, what I'm doing. It's a documentation. And so with that being said, this is for educational purposes. Really, it's just for fun. And that none of this is financial advice because some, if not most, of these trades will be bad. So far, I did have one last week. I took a pretty big loss, but I did roll it because I think that the one that I was holding is likely to be going to zero because most, if not all, of these contracts that I do go over will be going to zero. Options are very risky, and because not only is it a trade, but it's a trade within a time frame. And they do tend to go to zero. And of course, plans do change, whether it's intraday or between now and Monday, whatnot, plans do change. So take all of this with a grain of salt, and all of the data that I do compile in these spreadsheets, I more or less do manually. Some of it I do copy and paste directly, but even with that, there could be some typos. So be careful with that. And all of the data that I do update basically in between each week, I do take from Unusual Whales. I have the the annual subscription. And if you're curious about Unusual Whales, I would recommend trying out the free tools that they have. And maybe the spreadsheets that I put together would be helpful in navigating them. And then once you feel like you're getting some value out of it, then maybe do monthly or annual subscriptions. But yeah, I did the annual because I find it useful for the channel, useful for me in my learning. And then, of course, as I mentioned, there's not going to be timestamps for this week, just because it's going to be a short video. And then, looking over the guide and just on the note that I was saying that every single week I want to put more into my account, and I really just need to not be spreading myself so thin. So I had wanted to get a QuantumScape call this morning, but I said, no, I just need to watch that one. I don't want to spread myself too thin. And, I'm probably not going to go over it, but Rivian, I don't necessarily think the bottom's in just yet for that. So I'm waiting for that one as well. And so, yeah, I am holding this plug one though, so I need to change that icon there. But yeah, these two, I'm just keeping my eyes on them. Same with the Luminar one. And yeah, but for the most part, all of them I do hold. I do want to get out of some of them, like the ChargePoint one, the Hycroft mining one, as well as the, let's see, and the plug power. Actually, no, I just got into that. So yeah. And for this guide, the thing I wanted to mention is that basically all, with a few exceptions, I have limits set to exit my positions at 20% profit because, I'm red in most of them right now. And, I know May and June, still many months away from now. But, I just need to really be consolidating more by the end of each week. And I haven't been doing that. I need to be a little bit more disciplined. So, yeah. And so I'm just going to kind of go through these pretty quickly. And hopefully this is useful for you guys. And let me know in the comments if it is, and I am going to bring Ed back now that I've gone over the list there. And so, first, let's see, looking at AMC, I'm not buying any of these calls, whether that's the $8 call that expires in June or the $20 call that expires in January. As you can see for this one, I did take some profit on it. I regret not exiting before the dilution announcement. Personally, not too happy about that, but it is what it is. Anyways, I just have two contracts and I plan on exiting at 10% and 20% profit. And then if I do look over at the other contract, I think I have, let's see, I'm not sure. I think 4 contracts still, four positions, or I don't know how to phrase it. I have 4 of these contracts, and I plan on, with this limit sell, exiting at 47 cents based on my average at 39 cents. The other one average still 53 cents. So yeah, I just am spread too thin basically, and so I'm not adding to this. I guess I should have had the note of $3.05. I just tend to delete that at the start of the at the end of the weekend, basically, as I haven't really refined the formatting of this. But yeah, I think that price could be coming down to around 325. I hope that's the bottom for AMC, but if it does break lower, I would probably just more aggressively try to get my averages down. If it came down to 305, really just to exit at that point at break even. But if I do flip over to the data here from Unusual Whales, I'm not going to dive too much into it, but I did just want to go over the premium here. And the volume for the day of Friday. So this is for AMC, and we can see that the net call premium went down by $500,000, and the net put premium went down by only $100,000. So, the majority of this is selling calls, so that's bearish. The selling of puts, that's bullish, but there's just not that many. And overall, we can see that the volume was, just net selling for the day. I also, though, did want to go over just the max pain. We can see here that for AMC, it was $3.50 for the day, Friday, January 24th, for the week, I should say. And if I do flip over to Webull, we can see that we did close below that max pain, so that is fairly disappointing, but it is somewhat reassuring that we are putting in higher lows, but we'll just see how long that lasts. This could be a bear flag and it could break lower, like I said, going down to 305. So I am not being too aggressive with AMC, whether that's shares or those call contracts. And so now let's just go over to the next one, which is going to be BlackBerry. This is one, I just have one contract, and, I think that this could be, a very nice long-term hold. Also, I just think it's funny. BlackBerry, if I said Bed Bath Beyond, I always want to say that, but BlackBerry, this is the $7 call expiring in January of 2026. I think that this could be, a comfortable hold through the year. But, I just need to be not spreading myself so thin. So I do have a limit sell for that one contract at 20% profit. So really nothing too exciting there. If we do look over at the chart for BlackBerry, the reason why, I feel like probably good to get out of that, get out of this. This does look like it is a bull flag, but there is the possibility that this fades, that it breaks lower, and I just don't want to be holding the bag. It would get my attention if it did dip down to around $3.85. I think I might have a buy order for a couple shares, and so that is a way that I would be long, but then not with the risk of holding something that might be expiring. And then if it did go lower than 385, I'd accumulate more aggressively, because I think that BlackBerry will be a good performer this year. Just don't want to be spreading myself too thin with contracts. Looking over at the data here, we can see that the net call premium was up by about 69,000, whereas the net put premium was up by 22,000. So this overall is net bullish. We can see that the green volume here corresponding with the increase in the call premium and those calls going up. So I think that looks good. And if we do look over here to see what the max pain was for today, just out of curiosity, I think it's a good thing to be checking. So BlackBerry, the max pain was $4 a share, and we closed above it. So that's actually, a good look for BlackBerry. So good for us, but still, I am going to be disciplined. And I'm just going to leave that 20% order, so I don't feel the need to add more cash to my account. I can just pivot from BlackBerry to, a different one. And then so next on the list is going to be Celsius, and this is the $50 call expiring in June. I also have the $100 call expiring in January of next year. And so for the one that expires in June, I believe, I have taken some profit here, did take some 20% profit, but now I do have a limit sell to exit. I think I just have one contract left because I did, take these profits. And so that would be at a limit of $1.52. Currently trading a lot lower than that. So maybe this is one I want to add to. I just don't have any orders placed on it just yet. And then this other one, because because the other one expires in June, I'm going to leave this one open, but I do have a limit sell that would be at a price of, or a premium of 65 cents. We are about, 30 cents lower than that. So not looking so great, but I only have one contract. It expires in a year, so I'm not stressing out about this. I do think that this one will print, but I do think that, the ones that expire in June are a little bit riskier. And so if I do look over at the chart here, I do think that there is quite the possibility that it's forming a bottom here at around 25, but it did break below this uptrend that I was keeping an eye on. So, maybe that's not looking so good. If I do flip back over to the data here, we can see that, kind of a mixed bag with more selling of contracts in the first part of the day, but then going into, more buying. And that actually looks bullish in the sense that we see the net put premium in red coming down, staying down, and the net call premium initially came down, was negative, but then ended the day positive. And so we have a net call premium increase of almost $300,000, whereas the net put premium went down by just over $200,000. So overall, that's net bullish. So I think that looks pretty good. And if I do look over here at the max pain, we can see that it was $26.50 for the day. And, we closed notably lower than that. So maybe this will be closing or going lower, I should say. But yeah, just to manage that risk, I'm going to be exiting these positions at 20% profit. And then, I'll reevaluate the other ones that I'm holding. So the next one on the list is ChargePoint, and this is the $2.50 call that expires in May. This one, I feel like there's a high chance this is going to zero. I wasn't planning on adding to it, but then in going over the chart during pre-market prep and really looking at the chart on Thursday evening, and I actually, am recording this on Friday. I believe I'll just release it when I'm done recording. But anyways, last night, Thursday night, was looking at the ChargePoint chart thinking, hey, I think the bottom's in. I should probably go more aggressive with these calls. And then, thinking about it during pre-market prep, I placed an order to, I think actually... Oh, yeah, that's not 26, 16. I placed an order to get 24 contracts. I had initially had, I think, 12, and I was thinking about doing 24 to really get my average down. But unfortunately, only 16 got filled, so I canceled the remaining 8. I did get an average fill, at 0.3 cents. And so this is actually not correct. I need to adjust this. Let's see, this should be, equal sign 0.03. So 3 cents was the fill times the number of contracts. And so that's $48 put on it. My average still is here, which is, let's see, based on those numbers. So that's good, 5 cents. And so I plan on exiting at effectively break even with fees because of all these contracts that I'm holding now. I'm probably going to lose a little bit of money on this, but I just want to get out of it. So that is my plan with ChargePoint. And so we'll see. And I'm probably not going to do another aggressive buy like this. That's definitely kind of uncharacteristic for me, but I just feel like, this might be my chance to exit. But it's possible that, it does continue lower. If we do look at the chart here, we did get a little bit of a bounce, but it didn't go up as high as I was hoping. So we might continue to see a fade following this purple downtrend that I have drawn there. If we do look over at the options data for ChargePoint, it actually does look like there was some buying, and that buying was of calls. So this is looking better than worse. Increase in net call premium of $19,500, whereas the net put premium decreased by almost $9,000. So this is net, bullish signal, but maybe it's not continued. And so we did close at $1 a share, which I believe, was max pain for the day. So that's kind of disappointing. Would have been nice if it was, higher than it by, 50 cents or something, but it is what it is. And so, yeah, hopefully I can exit at, break even, but if not, that's no big deal. So the next one on the list, I might actually skip over this one. This is GameStop. I do have my limit sells placed to, exit at about 20% and about 30% profit. I do think that this could be going a lot higher, but, just need to be managing that risk, so I'm not tempted to add more to my accounts. I guess I will look at the chart really quick because I'm an addict. I can't not do this. Did look like maybe this is a bottoming signal, but this could be a topping signal, and closed at 27.77. So let's see what the max pain was for GameStop today. 28. So yeah, we closed below that. So this might continue to fade more, so I'd look for it to come down to like 26.15, and maybe that is something I want to note on the chart here. So I will do that. Just, noticing or noting that, I might want to add more aggressively if it does dip down there, whether that's shares or, contract. Next one on the list is Hycroft Mining. This is a $3 call expiring in May. I've had this limit order placed all last week, did hit a low of 15 cents, did not get filled. I think I actually have a good amount of money on this one, and I don't want to be too aggressive in buying the dips because this one I can only sell in 5-cent increments. So with my average at 39 cents, I would be taking just a little bit of a profit, but with fees, might be just breaking even at 40 cents. So I have a limit sell to exit at 40. And, we're at 50% right now. So it's kind of disappointing, but hopefully we get some moves. Hopefully this doesn't get filled, and hopefully I can get out before May 16th. But if we just look over at the chart really quickly, I'm wondering if this is going to be breaking out from this downtrend, but maybe this is a bear flag and it breaks lower, so I don't really know. This one's kind of a disappointing one. I was expecting it to be able to get back up to $3 a share. If I do look at the data over here, just skipping over GameStop, this looks like kind of a mixed bag. Net call premium came down by $524 for all of the Hycroft mining contracts, so that's pathetic. Net put premium came down by $350. So this is more bearish than bullish because the call premium went down more than the put premium. And then if I do look over here to see what max pain was for the day, and we can see that it was $2 and we closed above it, so that's good. So hopefully this launches, and hopefully I'm able to get out of my position for break even at 40 cents, but we'll just have to wait and see. Intel is one that I'm pretty excited about, but it has been pulling back some. I did add to my position today at 60 cents, which is a little bit higher than the low, and I do have my limit sell placed for however many contracts I have right now. I'm not exactly sure, but to be exiting fully at 20% profit, which would be at 79 cents. And so if we do look over at the chart to see that one, it does look like it could be pulling back, maybe coming down to 20 cents or $20. So that is kind of what I would be looking for. And if we do look over at the data here for for Intel, we can see that the net put premium came down, was more negative than the net call premium, but we can see here that the net call premium came down by about 1.7 million, whereas the net put premium came down by about 2.6 million. So that is more selling of puts than selling of calls. So, or at least as far as the premium goes, but it does look like the volume increased over the course of the day. So these are probably just selling more expensive contracts, whereas more cheaper contracts were being bought, whether to the bearish or bullish side. I don't really know. But yeah, this looks kind of, I would say more, let's see. I guess, the net put premium coming down more than the net call premium, that is more on the bullish side than the bearish side, but, it is kind of neutral. And if we do look over here to see what the max pain was for Intel, it's $20.50, and we closed above it, so that's a good look. So, maybe we fill this gap here at around $20, and, if that does happen, that might be a good dip buy level, so I might just note that there for myself to consider $20 there. And I should have noted that I also do have this $50 call that expires in January. I think I just have, these two contracts, plan on exiting at 20% profit, which, is not going to be a lot of money, but just trying to manage that risk. My average is 32 cents. The low for Friday was 30 cents, just above my limit buy at 29 cents. One more contract, no big deal. But yeah, hopefully we can get a bounce to around 38 cents, and that was the high for the day on Friday, so I think that I'll probably be exiting this one, which is maybe a little bit unfortunate, but I just can't be spreading myself so thin. Just because I'm covering tickers here does not mean I need to partake. I can just cover them for the fun of it, like I'm doing with this Luminar call, $15 strike that expires in January. This is just, not a very exciting one over the past week, but it is on my radar. If it does dip to a premium of about $1, then, I might want to pick up one of these contracts. But so far, just watching it, no big deal. And yeah, if we do look over at the chart for Luminar, I think I mentioned this a couple days ago in pre-market prep on Thursday. I feel like Luminar could be coming down to test this purple line around $5. So I do have an alert there, and yeah, so maybe I want to put $5 here. And that's another thing that I would be looking for. Maybe that would be a sign to pick up one of these contracts. But yeah, if I do flip over to, let's see, unusual whales, I can pull up this contract. Looks like it was net selling for the day as far as the volume goes. The net put premium came down by almost 37,000, whereas the net call premium went up by nearly $3,000. So overall, more decrease in put premium. So that's more selling of puts. That's bullish, and the slight increase in net call premium, that's bullish as well. So it seems like a lot of puts are being offloaded here, so that's potentially a pretty good sign. And then if I do type in LAZR over here, we can see that the max pain was $6, and we did close above it, so that's a good look. So maybe this is just a fake out break below that uptrend, and we do start to see this going higher. And yeah, just coming back to here, let's see, I'm going to need to kind of go a little bit quicker because I don't want this to be like more than half an hour long. Marathon Digital, this is one that, nothing really too exciting for me going on with this one. I got the one contract kind of rolled from the previous one that I was losing money on that I thought was going to go to zero. Rolled that money into this one, $2.50 for the total cost. And following that, dip buy, we have not seen price or the premium come down to $2.50. So I have been in the green. And so my plan with this one, it's a little bit different than the other ones. I plan on holding to at least make back what I had lost before, which is, to be clear, not revenge trading or anything. I just think that Marathon Digital could be going up to $7.50 for this contract premium. So I'm just going to wait for that. If it does dip below $2.50, maybe I get another contract, so no big deal there. I guess, I'm going to try to go over the chart. I could see this potentially happening, but it does seem like, as I've talked about, we could be seeing some resistance at that purple uptrend. I think I went over that on Friday's pre-market prep as well as Wednesday's pre-market prep, so you can check out those videos if you'd like to. And then, yeah, I'm probably just going to type in the max pains over here because I don't have enough time to be going over all this stuff. 1950 closed above it, so that's looking good for this Friday the 24th. Coming back to the contracts, I have added to my NEO calls this one, which is a $10 call expiring in May. Plan on trimming at 0%, 10%, and then fully exiting at 20%, which is at 19 cents. My average is 16 cents. And the highs for the past week was 14 cents, so maybe I could get out of it, but we'll just have to see. It's just getting a little too close for comfort for me. I feel like I was just early with my NEO positions. Kind of similar thing with the June call that that has the strike of $8. And so this is one I did take a little bit of profits on over here, break even a couple times. And I did have this going all the way up to like hundreds of percent. But I recognize, I've got a lot of money locked up into this. Maybe it doesn't play out as I expected. Maybe NEO and Chinese stocks move a lot towards the second half of the year, not the first half. And so I should trim, at 10%, close one position or one contract of that. And then the remaining at 20%, which would be 55 cents versus 10%, which is 51 cents because my average is 46 cents. And I don't have any buys for this one placed, but I do for the one that expires in January, and that would be at 26 cents. We hit a low over the past week of 26 cents. I'm not sure that I had that placed because I had this order filled 30 cents on Tuesday, I guess, the 21st. And so, yeah, maybe this gets filled, maybe it doesn't, but I'm not sweating it. And because I have those other contracts that expire in May and June with those limit sells at 20% profit, I don't have any limit sells for this one. So we'll just kind of see how it goes. And then if I do go over to the NEO chart, there is some hope that, it's finding a bottom here, maybe start breaking out, but maybe not. I did see something about Trump possibly having 10% tariffs on China. So maybe that's a negative, but at the same time, I kind of view, Chinese products are a little bit cheaper than made in the USA products. And, maybe that difference is 10%. So I think that kind of like levels the playing field for the Chinese products to be more on the same level as the US products. So I don't really think that's too big of a deal, but maybe I'm misunderstanding it. Looking over here, the NEO data, we can see that max pain was $4.50. We closed below it, so not such a great look there. But I actually want to look at the options data to see, net buying for the day. Volume was positive at the end. And we can see that net call and put premium were both positive. We see net call premium up by about 800,000. However, net put premium was up by almost $1 million. So that's more bearish than bullish. So maybe the bottom's not in just yet. Then coming back over to here, plug. This is when I went over during Friday's pre-market prep, January 24th. So check that out if you want some kind of analysis on the plug chart. But here, I did have a buy order placed, kind of inspired by the analysis between Thursday and Friday that I go over in the pre-market prep video. So I did have a limit order, and I do have a limit order placed to buy another contract at 32 cents. But so far, I think I've just got the one at 37 cents. And because, I'm trying to be more disciplined and I don't want to be holding the bag forever, I do have a limit sell placed at 44 cents, which is not too, that was the high that would have been filled at the beginning of the week. So maybe I can, take some profits and exit this. But yeah, I'm not too concerned about it. And yeah, so I got that buy placed, and let's just look at the chart. This really, when I went over in the pre-market prep video, I drew a lot of these lines. But yeah, from this retracement here, Fibonacci retracement, we have the 786 at right around $2, also $2 being a psychological level. And then we have this purple downtrend, which was the neckline of this inverse head and shoulders pattern, which took a while to play out, but it did. And yeah, so I feel like the confluence of levels there seems like there's probably going to be some support. So I could see this going up to $3 a share. So yeah, I'm just really excited about it. And it did close above $2. And so if I do look over here at plug power, we can see that the max pain was $2. So that's a good look for it, closing at 208. But then coming back over to here, this is one I was excited about. I did have a buy initially placed at 80 cents, which was the low for Friday. Oh, no, by the way, I should say this is the QuantumScape, ticker symbol QS, $10 call expiring in January 2026. I did have a buy placed for 80 cents today, but then I removed it prior to open because I was excited about ChargePoint. And so maybe that's a bad decision in the end, but I just shouldn't be spreading myself too thin. This is just one that I'm watching. Fine to watch it because, I think that it looks good, but I do have some shares, so this data is useful for me in that sense. And hopefully it's useful for you guys too. But yeah, I am going to be staying away from this just because I don't want to be spreading myself too thin. I do think that the chart looks pretty good for it, coming to this uptrend, but maybe it does continue lower, so good to consider that. Closed at 516, so let's see what the max pain was for QS. It was $5, so it did close above that. So looking good, but I think I did want to show, the data here. Actually, I think for yesterday, so I might want to switch over to that. It wasn't looking too great. Net call premium, though, for Friday was up by over 19,000, whereas net put premium was up by less than 4,500. So overall, that's a little bit bearish there, but majority on the bullish side, so that's good. That the calls are going up more than the puts. But if I do flip over to show 2 days, I think I was a little bit concerned about this because we see, the volume being positive for the day, but calls and puts both being negative, and then a big sell-off in the put premium by the end of the day, closing down 200,000, whereas today closed, up only less than 20,000. So this just over the past couple of days seemed a little bit more bearish than what I would be hoping looking at the chart. So I just didn't want to spread myself too thin. The next one on the list is Rivian. I'm just not feeling too confident about this one. Out of contracts, I have a couple shares, but I actually plan on with a stop loss exiting my one position, I believe, around $12 a share. And I should note that this is the Rivian $25 call expiring January 16th. I think this might be one to get into later, so I just want to be watching it now, but I don't think it's the right time to be getting in now. Looking over at the chart here, I think that this could be coming down to 12. I have a stop loss there. My average, I think, is 1169. And so I have two shares, so not a big deal. I did have more up here, but I exited because I was adding up here, but then realizing, well, it might be coming down. I shouldn't be adding, getting my average higher. So I exited the majority of my position, holding on to just a couple of shares in case it ripped higher. I would have one to trim, but now it's just like, I have a stop loss for one at 12. If that gets filled, then, I can more comfortably buy and get my average down if it does go below my average of 1169. But here, I could see it coming down to 11. So, I will just be waiting for that. That does correspond with the 786 from this Fibonacci retracement. So, I'm not going to be getting ahead of myself with this. I just don't think it really looks that good. And, it could even be coming below 11. So I will sit on the sidelines for the time being. But let's look over at the data for Friday here. For Rivian, we can see that the net call premium went up, whereas the net put premium in red here went down and was negative. Net put premium went down by $145,000, whereas net call premium went up by 1.4 million. So that is a good look. And the increase in that call premium seems to have corresponded with a net buying of calls, I would imagine, as the volume has increased. So that is looking good for Rivian, but I just think it's probably going to go lower. And so looking at the data over here oops, I don't know why it didn't load. I typed it in there. Rivian. So I guess I have to click on it. I don't know what's going on. Okay, so Rivian. There we go. $13 was the max pain for Friday the 24th. And we closed below it. So, I don't think it's looking too hot. But then the next one's over here are going to be Unity Software. And so this is ticker symbol U. I've got the $42 call expiring in June. And then let's see, also the $65 call expiring in January of 2026. It looks like I'm holding both of these. I guess I just left this one alone. I'm kind of surprised by that, but I do have I think I just left that alone because, I have this one at the limit sell for 20% profit. I could have, sold, that would be at $1.28. I could have sold for, let's see, where did I buy initially at 127? It went up to 265. I could have sold for, a more notable profit, but I didn't. And so, I just need to be disciplined. I've got now 4 contracts. So, even only 20%, I'd still be making a nice chunk of change there. And the underlying, I guess I typed that incorrectly over here. 1277. No, that's not right. Unity Software. That was the Rivian number, and I don't want to click on that. So Unity Software 2232, and this is why, it's good to be paying attention to the numbers because I do put these in manually. And so, I just noticed it because the line came off the chart there. So now that that's corrected, let's see, my thoughts with this one are, I just want to kind of exit at 20%. If I have 4 contracts, that frees up about $500 for me to be able to, be rolling into other positions, maybe be in this other longer dated position that, I'd like to exit at a 400% profit, which would be at $5, given my average is $4 per contract. Whereas this other one is 107, and it looks like, I got 4 of those. And so, coming over to the chart here, Unity Software, Maybe this is coming lower. Maybe I could draw a trend line here that might suggest where this could be going, but, hopefully not. But, we'll see. Yeah, I'm just going to actually look over here, Unity software. We can see that the max pain was $22.50. If we look at the chart, we did close below that, so not looking so great. And if you do want some of my analysis on Unity software, I did go over it during the pre-market prep on Thursday the 23rd, so you can check that out. And then, the last one is the VIX. I'm not going to be covering this one anymore because I do go over the UVIX and the VIX during pre-market preps, which I will do every single weekday that I can. Unfortunately, I won't be doing that on Monday. But anyways, that is all of them. I'm not going to go over the unusual whales data for the VIX. But yeah, hopefully, this was useful for you guys. And, I do plan on doing a more extensive one next Saturday, but there will be a link to this in the description, the spreadsheet, if you're curious. But, anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Take care, you guys, and have a great weekend. I will see you probably on Tuesday or something during pre-market prep, I think. Anyways, take care.